What is up, everybody? Steve here. I hope you are doing well. I came across a very interesting article that I want to bring you guys through because it is telling as to what is going on in our real estate market. If you guys haven't heard of it, it's called wolfstreet.com. This guy, Wolf Richer, very bright guy, does his research. Anyway, I want to bring you guys through this article, and I want to get your opinion on what you guys think about this as well, because I don't know. It could be... The writing could be on the wall as to what's going to happen in our real estate economy, real estate market. Let's take a look. Housing bubble getting ready to pop. Unsold inventory of new houses spiked by most ever to the highest since 2008 with 9 months supply. Sales collapse as prices below $400,000. Now, real quick, before we get into it, a healthy real estate market is about 6-7 months of supply. Now, if you have too low, which we've obviously experienced, I think over the last couple of years, it's been like 1.6 months supply of inventory, and that's just extremely too low, which has caused obviously the skyrocket of housing values and rental rates and everything else. And if it's too high, that means, you know, simple supply and demand. There's probably too many houses on the market, and then the values of real estate come down based on that supply demand. Now, it goes on to say, sale of new single-family houses in April plunged 16.6% from March and 26.9% from a year ago. Sales of new houses are registered when contracts are signed, not when deals close, and can serve as an early indicator of the overall housing market. Something very important to take away from that. Sales of new homes are registered when contracts are signed, not when closed. So, you know, where the numbers can be manipulated is you can get people, especially right now, and I've done other videos of people backing out of or just not being able to get the financing because rates shot up. And so when somebody signs a contract, they're utilizing those figures as opposed to the actual closing when they actually CO and close on the property. And what's been happening is you have people that, you know, they're signing a contract and the house can be built in 8-10 months. And unfortunately, they were unable to lock their interest rate, and the interest rates have just been skyrocketing. So unfortunately, people, they just can't afford it. And a lot of people that can afford it are just very uncomfortable paying $300, $400, $500 more per month in mortgage interest. We can go here and see actually the new single family houses sold annual rate, and we can see that on a sharp decline right here. By region, sales plunged the most in the South, negative 19.8% for the month. Year over year, almost 37% negative. Midwest, negative 15% for the month, and negative 25% year over year. The West, negative 13% for the month, and negative 12% year over year. And the Northeast is still going strong. They were a negative roughly 6% for the month, but a positive 17% year over year. I anticipate that is going to change as well, and it's going to trend along with the South, Midwest, as well as the West. Unsold inventory of new houses spiked in a historic month-to-month leap of 34,000 houses and by 127,000 houses from April last year to 444,000 unsold houses, seasonally adjusted, the highest since May of 2008. And everybody knows roughly what happened in 2008. But let's go ahead and take a quick look over here while we got you. Right now, if we look, and now this is Fred. You can type in housing inventory, Fred. You guys can have full access to this chart as well. And it's a telling sign. But right now I have, and you can figure out the Fed rate. You can figure out the 30-year mortgage interest rates per this chart, and you guys can come over here. Anyway, so right now we can see this is housing inventory active listings count in the United States. As of April 2022, we have 410,000 houses active on the market for sale. Now, if we go back to this article, we're talking 444,000 unsold houses for new homes. So if these houses start to trickle out to the market, our available inventory, our active inventory could essentially double. And what would that do to house prices? Simple supply and demand. The more inventory that comes to market aggressively, the obviously prices are going to decline. And now this is not considering other things like the backlog of foreclosures, the natural cycle of just people selling properties, potential for some of these big hedge funds if they're not getting their yield based on floating interest rates, and the rise of interest rates going up, and these institutional investors are not getting the appropriate yield. We might start seeing some of that inventory trickle to market as well. And we can come here, new single family houses for sale, and we can see how that's just jumped up recently, especially in 2022. By region, unsold inventory spiked the most in the South and dipped in the Northeast. Percentage increase year over year. We have in the South a 53% increase, Midwest a 39% increase, in the West 8.4%, and Northeast a negative 4%. Supply of unsold new houses spiked in a historic month-to-month leap from an already high 6.9 month supply in March to a dizzying 9.0 month supply in April, having nearly doubled from a year ago. And now we can see month supply of new houses just shooting up. And I think we're going to get to this area right here potentially. Anyway, I'm going to leave this article in the description below for you guys, but I want to know your thoughts in your area. Are you guys seeing price reductions? Are you seeing properties come back on market? Are you guys seeing more inventory come to market? Let me know in the description. And also, if you guys are getting value out of this, just go ahead and share this with one person you know that might get some information from these videos. I really appreciate it. It really helps the channel out a lot. And I appreciate you guys being with me here today. Thanks for being here.